Good morning from Los Angeles, a rainy Los Angeles. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. It's turning out to be quite a week, right? Super volatile. Predictions are holding pretty much as far as volatility is concerned, although this week it's more of a 2024 playbook, buying every dip, which I'll talk about, and people are committing their dollars, specifically retail, which I'm going to talk about. And is it a good thing? Is it a bad thing? But we'll discuss all that during the topics. So a couple of other things. So I'm live 3 times a week. First of all, thank you for the support. Please subscribe, put a thumbs up, share the content if you're really liking it, and please comment. Channel has been around about 6 months now, growing slowly and steadily. The only way it's going to grow, obviously, is by you liking the content and sharing it, as well as YouTube algorithms, which I have no clue about how they work out. But so I'm live 3 times a week. Mondays is Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Fridays is Power Hour. They last about 60 to 90 minutes, depending on what's happening. So today is Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. And Wednesdays, I do a special live stream for the members only. That's going to be 3 p.m. Pacific, 6 p.m. Eastern going forward, since my son's soccer season is almost over at high school. And the members get a few different perks. Let's get that out of the way. Number one, they have direct access to me through a Telegram chat group. It's been going great, really. A lot of great people, a lot of good traders, a lot of newbies learning, trading, understanding the nuances of our business. And if you decide to become a member, please click join. You get an extra live stream a week, every Wednesday. The other thing you get is obviously being part of the Telegram chat group. It's just for members only, and you get the T-shirt that I'm wearing, which we called our trader group or chat group on Telegram hashtag Know Your Worth group, right? So I will send you a free T-shirt, $30 value, including shipping. All you have to do is email me, Sergio@sergioavedian.com, and tell me your size, T-shirt size, and your address, and we'll ship one out to you. So with that said, pretty volatile week. Bitcoin not doing much. Stocks grinding higher, almost at a new all-time high. Retail fully committed, buying every dip. There was a really negative CPI number that came out a few days ago. Market gapped down, but it was bought, and now we're visiting all-time highs again. Is it reasonable? I'm not sure, but volatility certainly has picked up from 2024. And the important thing is to be safe during volatility. Volatility either will make you or break you. A lot of people blow accounts during volatility because, volatility is not everyone's friend. So with that said, I'm going to go into topics. The other thing I'm going to do today is I'm going to put the link out for if anyone wants to show up and talk about anything they would like to talk about. It's going to be more of an interactive episode of Power Hour today, as opposed to just me yakking about it. I will obviously answer questions at the end and in the chat. So if you do have any, please put it in the chat. I will share my screen, my positions. February, I had a great January. I was up 37% from the first of the year. February is becoming a little bit of a struggle because my bias is turning a little bit more negative, and I'm taking some short positions which are not working out. But that's all trading, and you got to manage your equity properly. And at the end of the month, if you have $1 or more than the one before, you did okay. So with that said, I'm going to go into about 5 or 6 topics, interesting topics today, actually. And once I'm done with the topics, we'll just hop on and share the screen and my positions, my watch list. A lot of stocks are moving absolutely like pork bellies. Okay, stocks like Palantir, stock like Oklo, and hims and hers. I mean, these they're melting up, and Robinhood, let's say, as well. it is really, really, a trader's dream if you're on the right side. If you're on the wrong side, it's your nightmare. I was on the wrong side on Palantir, and I'm taking another shot at it, but I'm not sure if it's going to work out. But again, none of this is trading or financial advice. Do your own due diligence. I get in and out things fast. One last thing, full transparency on this channel. I post my losses, gains, everything clearly with transparency. So every Monday, Wednesday, and Friday, please go visit the community page of the YouTube channel. All my positions are open positions are listed there. So hopefully you guys will enjoy the transparency. So with that said, I'm going to go into a few topics and then we'll move on. Do our usual thing. I will put the link up if any of you want to show up shortly. So the thing that I want to, first talk about is, as we know, I have been mentioning this for quite a while. We have almost $37 trillion in national debt. The national debt does nothing but grow. Every 100 days, it goes up by $1 trillion. Okay. And why is this happening? Well, that's because we're borrowing and spending. Our balance budgets are blown away. Washington loves spending money they don't have. And that's why we have the national debt, 36.5 trillion going on to 37 in another, probably 60 days or so. And it'll be 38 and it'll be 39. Yes, I do understand there's DOGE now, Department of Government Efficiency, with under Vivek and Elon. How could they, first they need to stop it as opposed to do anything else, stop it from growing, and then hopefully they'll cut it. I have a great video that came out yesterday, actually, that supposedly DOGE is already saving the U.S. government $1 billion a day. So, okay, well, it's $365 billion a year. How does that compare to $36.5 trillion? One. Two, the big deal with the $36.5 trillion national debt is that the Federal Reserve's hands are tied because of the broken fiscal policy. So the monetary policy is following. What do? They issue bonds. They have to, they have to issue bonds. I mean, they have to close that budget gap, which is running at $2 trillion a year plus. Well, so Fed has been doing this. I mean, look, we've been in a zero interest rate policy for a long, long time, since 2008, actually. And then they pivoted, went to hiking rates because inflation showed up with a vengeance. And the only antidote to kill inflation is hiking interest rates. And they did, from 0 to 5.5%. And everything went up accordingly, right? Mortgage rates, car loans, everything else, credit card interest rates, they all went up. Well, now the Fed is on a pivot trying to lower interest rates, but it's not working out. The market's not buying it because they see inflation coming back. And sure enough, on Wednesday, we had a horrible, horrible CPI, but the market did not care. The dip was bought. But the point I'm trying to make is, out of this $36.5 trillion in debt, and out of $36.5 trillion in debt, we have interest payments. These are IOUs. Okay, these are notes, bonds being 30 years, notes 10 years, less than 10 years, T-bills. We have to issue debt constantly. Well, when we're issuing debt, the other thing we have is, besides the new debt we're issuing at much higher interest rates than when we had zero interest rate policy, there are bonds that are maturing every single day into the billions, and so they have to get replaced with new debt. And the new debt's interest rate is extremely high now. I mean, on average, we're up to 3.5%. And every single year now, well, in 2024 anyway, the interest servicing cost on this debt was $1.2 trillion. Okay, just the interest cost. And, well, looking at our defense budget, is almost double our defense budget, or 1.5 times our defense budget, or Social Security. That money is basically put on fire, right? The interest, we're just paying interest, just like you're paying interest on a mortgage or interest on a car loan. The Fed, the U.S. government is paying interest because they're issuing these IOUs. And so the new IOUs that are being issued are the ones that were issued at much lower interest rates when we had zero interest rate policy. Well, now what we have is, I saw this tweet, and I agree with it completely. So the United States has 66 billion in 10-year bonds from February 2015 coming due tomorrow. Okay. It had a 2% fixed coupon. All right. It is going to be replaced with another 66 billion 10-year bond, but this time with a 4.55 fixed coupon. Now you guys understand why the interest cost on the 36 trillion dollar debt is going up, astronomically. This one single rollover will add an extra 1.67 billion per year to the national debt for the next 10 years. Bond auctions like these are happening every single day. Absolutely, they are. And we're just beginning to pay the price for a decade of ZIRP. ZIRP meaning zero interest rate policy. All of that debt now costs taxpayer money. Absolutely. And just wait for the 2032, 2035 vintages when we're paying 5% for all the debt we took out when we had 4% unemployment and 3% GDP. So what is happening is that these new, not only we're issuing new debt because we're increasing the national debt by $1 trillion every 100 days, the replacement cost, right? The new interest rates that we have to pay these note holders or bond holders, the IOU holders, is going double. And so now the interest rate is going to exponentially go up from twos or low twos to high fours. So we're doubling our interest cost and we're increasing the national debt at the same time. So what's going to happen? I mean, look, the madness has to end at some point. And according to Spencer Hakimian, he was saying gold for risk off. Well, we know what's happening to gold, right? A new all-time highs. Why? Bitcoin for risk on. Bitcoin is just going sideways between 95 and 105 until it breaks out and goes to 150,000 next time up. It happened the same way, about 4 months ago, right? It went sideways for 6 months last year, and then it broke out, went from 50,000 to 100,000. Look, people must understand this. Under circumstances like this, all of us need to save in harder assets. What are hard assets? Obviously stocks. That's why stocks are benefiting from that as well. Stocks at all-time high, gold at all-time high, real estate at all-time high, Bitcoin at all-time high. It's all because of our monetary and fiscal policy that's being broken. And I am sure at some point, this is going to hurt bad. And when, I don't know. But we just can't keep kicking the can down the road and expect good things to happen. Granted, market's not paying any attention to any of this yet. When I would say market, the stock market, the bond market's paying attention because on the next one that I'm going to talk about is, as we know, Fed went from QE, quantitative easing, for 10 years, 15 years with ZIRP policy, zero interest rate policy, to quantitative tightening, right? So lower the balance sheet, increase interest rates, which they did to combat inflation. Well, did they? Not really. Does it look like it? Does it look like in your lives, in the average American life, inflation is coming down? Didn't look like it. I mean, egg prices supposedly are hitting new highs, but not that, that's an important subject. But if you look at everything that you're paying over the last 3-4 years, they have all gone up 50, 60, 70%, right? From car insurances, your rent, the most important things, your daily spends, your food cost, everything has gone up. And is it coming down? No. That's because things go up fast and don't come down fast enough. But the other thing is your W-2s, your job income, keeping pace with inflation? I don't think so. I don't, adjusted to inflation, incomes in this country have actually declined. So you all have to factor that in. And the important thing for the Fed now is understand what's going on, right? If inflation is going to come back a second time around, is the pivot that they started last September with a 50 basis point interest rate cut, is it going to continue? Now, do they actually have to stop lowering rates? Why is the Fed lowering rates? Because the economy is slowing down. That's what they're seeing. And the other thing is the interest rate cost that I just discussed. when Fed lowers interest rates, the only time I've seen it happen in the past 30 years that I've been doing this is when they see trouble ahead. You know, Fed does not lower interest rates if the economy is booming. And obviously they're seeing some troubling signs ahead and they're lowering interest rates. Okay, well, that's called the Fed pivot. Is this pivot working actually? Well, I don't think it is, just for the fact that just when inflation is, you know, rearing its ugly head again, you know, they took a victory lap, said, oh yeah, inflation is down to 2%, you know, unemployment is fine, GDP growth is fine, no worries. You know, they're just gaslighting the American public. What they need to understand is that by lowering interest rates now, they may actually be fueling the fire of inflation for it to come back. And we may, you know, I want all of you to go study a little bit of what happened in the 70s, late 70s. What happened in the late 70s? They did the same thing. They raised rates first, interest, you know, inflation came down a little bit, and then boom, the second leg of the inflation, you know, came around, and this time they really had to raise the rates and then kill the, you know, it literally killed the economy, put the economy in a recession. But am I saying it's going to happen again? Well, it seems like it. I mean, this pivot that they started is not working. The pivot is broken. It truly is. And, you know, they probably lowered interest rates when they shouldn't. And as we know, Fed is always behind the curve, right? When they need to lower rates, they lower rates too late. And when they need to raise the rates, they raise rates too late. So the Fed pivot that they started last September, the bond market is not buying it. The stock market's buying it. All the hard assets are buying it because they're seeing clearly that inflation is not dead. So when inflation is not dead, and if the pivot is not working, what are you going to do? Because the projections for 2025 were to raise rates, to lower rates 4 more times, okay? And now it seems like that's not happening. So I filed the Coinbase letter. So is this the worst Fed pivot in history? That was a headline on X, on Twitter. I agree. I think this was the worst pivot in history. Since the Fed pivoted, CPI has risen to a 7-month high. So Fed is lowering rates while the CPI is increasing. That's going to just add fuel to the fire. I think they're doing the wrong thing. So, and here's a chart. There's CPI, you know, coming back again. And this was in 2022, 2023, when Fed had to raise the rates and CPI came back with the, you know, inflation was there. We got up to 6, 7, 8%. Okay, it slowed down a little bit, but now the Fed's cutting rates. Inflation may come back worse than 22, 23. So what is going to happen? Is the Fed going to keep cutting rates into an inflationary cycle? And the prediction markets that, you know, I followed during the elections, specifically Kalshi, now they're predicting that the prediction market saying that 23% chance that rate hikes, not rate cuts, rate hikes, okay, may be returning in 2025. While as we know, according to the last Fed meeting that I watched or I listened to, what happened? You know, Fed said, okay, we're going to now take our time cutting rates. So they're taking the 4 rate cuts off the table for 2025. They said we may cut the rates in September. We may not cut the rates at all. It's data dependent. So they're just kind of changing the language. And I put a video out this week that is inflation dead? And please go check it out. And the, you know, CPI and PPI, consumer price index and producer price index, they're both going higher after going lower for a few months. And now that's putting the rate hikes on a halt. And is the pivot still going to work? I mean, you know, I talked about this before, right? I talked about something called stagflation. Stagflation is a stagnant economy with increased inflation. The Fed is cutting rates because they're worried about inflation and the economy slowing down, okay? The Fed is seeing trouble ahead, so that's slowing economy. And now inflation is rearing its ugly head again, or not again, and not that it went anywhere. It's coming back again. So now what? Now what? Is the market pricing in a Fed pivot? Is the market going to price? I don't think it is. At all-time highs, I don't think the stock market is I think the stock market is still swallowing the pill of a soft landing, which I definitely think is not going to happen now. And if the Fed says, okay, no more interest rate cuts, in fact, we're going to raise rates now, I see trouble ahead. I really do. But then that's going to add to the volatility prediction of mine. So, and the reason for that is multifold, right? When you're at all-time highs, okay, and all hard assets are making all-time highs, the markets are predicting something. They're predicting inflation coming back. They're predicting inflation not being dead. And the Fed has to do what they have to do. What does the Fed have to do? They're in a box because of horrible fiscal policy in Washington. Their monetary policy is just kind of put in a box. They're in, like right now, they're in between a hard place and a rock. They're seeing trouble ahead in the economy. They want to, slow that down. They don't want to get, obviously, we don't want to go in a recession. Then we know the market's extremely expensive if we go in a recession. So the Fed saw that trouble ahead and started cutting rates, but now inflation is coming back. So now you're in a catch-22. If you keep cutting rates, inflation is going to completely get out of control, okay? When that happens, then your next pivot towards tightening is going to be much more severe than what they did in 2022, 2023. So now we're in a box. We're caught in a hard place and a rock. So Fed says, okay, we're going to halt the cuts. We're not going to cut anymore because they're seeing trouble ahead in inflation as opposed to seeing a slowing economy. So stagflation is something, there is no cure for stagflation. If we do get stagflation, yeah, I don't know. I think trouble is ahead. Again, I'm not saying it's imminent, but I think this year is definitely going to turn into a much more volatile year than 2023 and 2024. So I'm not a gloom and doomer. I see what I see. I call it the way I see it. Am I seeing trouble ahead? Yeah. Specifically for another reason that for 2023 and 2024, when the Fed stopped raising rates, every dip has been bought. So we know the stock market, the S&P 500 benchmark, has returned over 50% in 2 years. That's not normal, okay? The average is about 10%. All right. So when the stock market is doing those kind of returns, that means, people ask me, why do stocks go up? Why do stocks go down? I just try to keep it simple, stupid method. I'll just look at it as supply and demand. Potatoes and tomatoes. Seriously, I mean, I'm being facetious. Obviously, you have a lot more work that goes into it, but I just tell them more buyers than sellers. When there's more buyers than sellers, stocks go up. When there's more sellers than buyers, stocks go down. Period. That's the simplest way of putting it. So when I say that, people go like, come on, it's not that simple. I'm like, yeah, it is that simple, because on a daily basis, if you look at it, if there's more buyers than sellers, more demand on something, price will go up. It's just like anything else, like eggs today. There's more demand and not enough supply, and price goes up. Price has to get adjusted. But retail traders, and there's also this $7 trillion sitting in money markets, right? And they certainly have been putting that into work over the last couple of years, and every dip has been bought. Is it time for every dip still to get bought? It seems like it, because there is clear indication that on last Wednesday, the CPI dip was bought, and that CPI opening was a nasty opening, right? And the opening tick was the low, and people just showed up with their dollars and they bought the heck out of it. And sure enough, we're approaching all-time highs on NASDAQ and the S&P 500. But so the appetite for risk is not only through stocks, but through ETFs. Obviously, people are passive investing, and they're going right, dollar cost averaging into S&P 500 index or triple Qs, whatever they're doing. And passive investing is very prominent these days. It was nowhere to be found 15 years ago. Today is a lot of people do that. But besides that, the market has created more tools called leveraged ETFs. Okay, not only people are buying into the ETFs such as SPY, triple Q, IWM, all these, VOO by Vanguard, by BlackRock, all these ETFs. There's trillions in these ETFs now, and every pullback, people stepped up with their money. But now what they're doing is they're getting more aggressive. They're buying these leveraged ETFs that Wall Street has created, right? There is 2x ETFs, 3x ETFs, and you're getting more bang for your buck. But if you're wrong, you're going to be horribly wrong in these things. So I highly recommend, if you don't know anything about leverage ETFs, just because you think you're going to make money, don't go jump into these things, because there is slippage in these things, right? They're not to be bought and held. It's for daily return purposes only. But the appetite for risk is through the roof. Leverage long equity ETF assets reached a record $95 billion last week, just in a single week, right? By comparison, during the 2021 stock market mania, leverage long ETF assets were $67.6 billion. Since Q3 2022, total assets in funds using derivatives to make long bets have tripled. At the same time, leverage short equity ETF, obviously we have leverage short and leverage long, ETF assets have declined by 13 billion to 8.5 billion. So, in other words, for $1 in leverage short ETFs, there are record 11 in leverage long ETFs. So all these need to get unwound at some point if there's a sell-off, right? So this will add fuel to the fire. So bullish sentiment is alive and well. It's pretty obvious. And to me, retail is in. So when everybody and their uncle has invested in the market already, and let's say there's 100 people in the room and 98 have invested, unless the remaining 2 are Warren Buffett types with 350 billion in cash sitting, right? You got to take the contrary opinion, contrary the other side. I mean, that's the way people make money in this market. So when everybody's in the boat, when everybody's in the pool, who else is going to jump in the pool? Unless it's a massive, massive whale, I don't know. Is this going to continue? Is every dip going to be bought in 2025? At the moment, so far, in just a month and a couple of weeks that we've been in 2025, yes, that's what's happening. And people are putting money to work on every single pullback because it has worked in the past. But how many of these people have experienced a bear market, a cyclical bear market? And because the average bear market lasts 18 years, luckily, not longer than that, but it's brutal, right? The drawdowns are 40, 50, 60%. Look at history. You got to learn from history. Again, I am not saying this is going to happen. I'm just putting a warning signs out there, that all the warning signs are out there, that retail is in the market full bore, right? They're all in the pool. And the rug pull is near, maybe. But I'm just saying that if you're a retail investor, which most of you are, be careful with just buying every single dip, because there will be a day that the music will end and, last one out the door is going to get hurt. So my concern is for the short term, for about, 6 months to 8 months ahead. Longer term, DCAing works. Dollar cost averaging works. And if you're happy, you should be happy with a 10, 11% return with the dividends reinvested on the spiders, on triple Qs. It works. Yes, there are down years, but in general, markets have a tendency of going higher over long periods of time. For traders like me, who pay attention to more short-term signals, I think we're getting a little frothy up here. And but is that going to stop me from buying things and selling things? Of course not. However, I'm going to be really, really careful this year, navigating and trying to hit more singles like I did in January, as opposed to going for doubles and home runs, right? Are there stocks that are going into nosebleed levels and fundamentally they're not worth what they are? Of course they are, but that doesn't mean anything, because the market's always right. The price that you see on your screen is the price. That's the scoreboard. You cannot argue with that. You cannot have personal biases or other biases, then otherwise you're going to go to the poorhouse trying to short all of these stocks, right? So to me, the important thing is making sure that when you do go invest, do it slowly. Dollar cost averaging works wonders. It has worked wonders. So dollar cost averaging, if you're returning 10% a year, and according to the rule of 72, take 72 divided by 10, every 7 years, you're doubling your money. I mean, in what world are you going to get that, right? So dollar cost averaging works. And the important thing is, everybody's doing it. When there's a dip, they're stepping by, and buying the market with both hands, and it's working for them so far. But I feel like there's going to be a rug pull this year at some point this year. Is the market going to go up another 25% this year? I don't think so. My prediction was about 6%. And to finish 2025, we'll probably make new highs, few more. and then end the year somewhere around 6 to 8% higher in the indexes. But we'll see how wrong my prediction is going to be. There was this Goldman Sachs analyst. Look, Goldman Sachs are the big boys on Wall Street. Whatever, whenever, wherever Goldman Sachs says something, I listen. Okay, they are the big boys of Wall Street. They're rarely wrong. And so one of their analysts was kind of agreeing with me, so I'm just going to put that up as well. Talk a little bit about what Goldman Sachs is thinking. And I do understand, by the way, so there's a seasonality in the stock market, okay? So we all know, I'm actually putting up a video this week about stock buybacks. So companies are buying back their shares. You want to call that hocus pocus accounting, fuzzy math, whatever it is what it is. There is $1.6 trillion worth of stock that's going to be bought back this year by all companies. Okay, that includes your Googles and Apples, and they're constantly buying back stock. So that's putting a floor under the market. That's one, but that's done throughout the year. But most of it is done in the first quarter. What else is happening in the first quarter? 401k allocations are coming into first quarter. Okay. All that money is going into the market. So seasonally, the first quarter is very, very strong for the markets. Okay. Well, especially the first month and a half or so. And what else is going in? Well, we have $7 trillion sitting in money markets, which is being, applied to purchase stocks. That's another thing that's going on. And last but not least, when importantly, we have to understand, as I said, more buyers than sellers, more demand for stocks. Well, okay. So seasonality, first 6-8 weeks of the year is very, very strong. And then we get into, watch out April, May, June periods. And then, summer rally happens if it does, because not too many people are around. But this Goldman Sachs analyst was talking about the same thing I was talking about. This is actually yesterday. Today is the 14th. This came out yesterday. Retail investors bought the dip after hot CPI. For sure they did. This Goldman strategist says the tide is about to turn, and they put a picture of everybody being in the pool, as you guys can see. And I agree with this. Seasonality is on the side of the market, okay? There's tons of money coming in. There's stock buybacks happening continuously, but that's something throughout the year. But then when the 401k contributions are invested, when the IRA contributions are done, and people do it usually before the tax season. And what's going to happen when everybody's in the pool? See all these people in the pool? Okay. When everybody's in the pool, what happens? Nobody else is left to get in the pool. And that's when the rug pull usually happens. Again, I'm not saying it's going to happen tomorrow or next week, but I do see definitely increased volatility. If nothing else, there's going to be a few rug pulls this year, and hopefully you'll survive and you'll watch the channel, and I'll be able to guide you correctly. But I do agree with Goldman Sachs on this one. Goldman Sachs, they may be a little early, like I am, but I think when everybody's in the pool, you got to watch yourself. You got to be really, really careful. And how do you be careful? Okay, so yeah, stocks go up. We have a saying in the market: stocks go up the stairs and take the express elevator down. We do know that's the case. It's been the case in the history of the markets. Okay, so when the rug pull happens, what do you do? Okay, how do you protect yourself? There's many ways to protect yourself if you are a trader. If you're a long-term investor, you don't have to do much. You just weather the storm, wait for the dip. If you have cash available, dollar cost averaging every month, whatever you're doing is fine. But if you're a trader, and then you got to watch out. So how do you protect yourself from a rug pull? Well, many different ways. You can short, right? Obviously. That's something that's really counterintuitive to a lot of people, but I can short as fast as I can buy a stock and sell a stock. You can protect yourself by hedging, by buying puts on indexes, or buying puts on individual stocks, or by selling calls. There's many, 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 many different ways of protecting yourself. And when you do that, your downside risks are going to be minimized. Is it going to eliminate the downside risk? No. But for us, the important thing is not to make it, is for us, the preservation of capital, how to keep it, how to keep most of it. And then if you're a trader, it's easy to make it. When the markets are hot like this, you throw a dart, you make money. And but when things are getting difficult, when things are selling off, like we have a couple of stocks today that are down 50%. That was on my watch list. And so what happens is that you need to learn how to properly hedge yourself. Okay. And can you make money on the downside? Of course you can. I mean, I usually make money faster on the downside than I make on the upside. But you need to be prepared. You need to have your strategies lined up. You need to have your playbook lined up. And when you do see the trouble, you act on it. Just like, stocks go up and stocks go down. Indexes go up, indexes go down. You don't have to be a jockey that trades something every day. Day trading, I don't do. But if you're a swing trader or a position trader, certainly you need to look into how to hedge yourself and how to minimize risk. And there are many tools. You can do it through the futures. You can do it through options. You can do it many, many, many different ways. And, so I'm just saying that be on the lookout for a couple of rug pulls this year. It'll probably be quick ones. I think macro is still hanging in there to a reasonable degree. So I'm not worried about a massive bear market or something like that, but there will be some rug pulls because, as we saw in that picture, everybody is in the pool, literally. So what is the hot sector space over the last couple of years at least? And now it's getting really hot, because every company that does issue earnings is talking about AI, artificial intelligence. AI here, AI there. We know. I use it, by the way. I use it on my channel to do some short videos. AI has, all of us have it on our phones now. Like we can write an email and then we can put it in AI and it'll write 10 times better than you, probably. So I think it's a boon for college kids. But then there is software, by the way, for that too. They'll catch you using AI. So be careful with that. But what has been the, buzzword over the last 2 years minimum, right? NVIDIA's and all these companies, from hardware to software to energy, because AI is very energy intensive. And, AI has been the key word. So I came up with this slide that literally shows pretty much who is who in this game, from CPU makers, GPU makers, from AWS to NVIDIA's to Google's and to. So this I think you should take a screenshot of this. What I'm going to do is I'm going to post this on the community page. These are all the companies that I could think of that are involved in the world of AI. So AI data center value chain, right? So from the top to the bottom, we're going all the way from what's needed, basically the chips to create these large language models, all the way down to the electrical equipment, the cooling, the nuclear part, the renewables, oil and natural gas. So this is a pretty comprehensive list with these little arrows going to its side. So on the top are semiconductors, right? So on the memory side is Micron, obviously, Samsung, SK Electronics. On the CPU side, AMD, Intel, and NVIDIA. GPU and ASIC side, Google, NVIDIA, AMD, Meta, and all these wonderful, wonderful companies who have done amazingly well. Then we move on to the server side, networking and storage side, IT infrastructure, Dell, EMC, Oxide, Broadcom, Marvell, Cisco. Cisco had amazing earnings coming back from the dead. Again, if you guys see, there is a common name here that is in a lot of, these groups is NVIDIA, right? And that's why the stock has done extremely, extremely well. So on the storage side, again, Dell, EMC, NetApp, Pure Storage. So these are the ones that create the servers and hard drives for this. Then we move down to the data centers these data centers are being created. I mean, massive ones are being created in Texas at the moment, as Azure, AWS, obviously Meta, Oracle, and then the developers for these, the developers meaning like actually real estate, right? These are massive, massive buildings that need to be getting developed. So those are Vantage and Equinix and DataBank and Digital Realty, right? So I think you guys should take a screenshot of this. If not, I'm going to post it on the community page so you guys understand what companies are involved. And on the energy side, because this is super energy intensive, so You have the renewables, oil and gas, Exxon, let's say, renewables on the Enphase, and on the nuclear side, Radiant and Helion, couple of other names that I've been trading, Oklo and Nano Nuclear. On the battery side, for storage, for electricity, obviously Tesla and a few other names. Electrical equipment side, Eaton, Siemens, and Vertiv and Schneider. And on the cooling side, again, wonderful S&P 500 companies. And I think this is something that you all should pay attention to. Now, a lot of people go say, Serge, AI is overhyped and this and that. I'm like, look, AI is here to stay. AI is not going anywhere. So this week, just this week, well, last week actually as well, Google announced, I think, $75 billion CapEx. Microsoft announced $75 billion CapEx. Meta announced $100 billion CapEx. CapEx meaning capital expenditures. Money is pouring into this field. You can't ignore it. These companies are not dumb. They are spending hundreds of billions of dollars building this infrastructure because AI is the future, according to them. They need, and at some point, they need to get an ROI. They need to get a return on all this money spent. And these people are not stupid. You know, Meta did not become a $2-3 trillion company because they're dumb, right? But I just wanted you guys to understand how big this group is. So don't just think NVIDIA, don't just think of AMD, because those are the well-known names in the GPU and CPU and memory space, or Micron. Think about it, that buildings have to be built. Maybe those companies are going to do well on the next cycle. Think of it as the software side of this, because think of it as the server side of this, not just hardware, okay? So I think AI is here to stay. Is it going to present some problems for our country and communities? Probably. I mean, you know, we have something called, that's been in discussion, and Elon Musk has talked about this as well, called universal basic income. Are we going to need it? I mean, AI is going to replace a lot of work, a lot of jobs. You know, we're looking at autonomous vehicles. How do you think all those are run? Those are all run on AI, and then machine learning and all this stuff is coming around. You know, autonomous trucks are going to come around now for transportation purposes, right? We know what's happening with autonomous vehicles. Waymo is around. You know, all these companies are spending billions and billions of dollars to do this, and it all depends on this infrastructure that I just pointed out. So do we need universal basic income at some point? Can everybody be a coder? Well, coders are, I think, in trouble too, because AI is going to write better code than they are, and much faster, and without too many, errors. So my thing is, this is a long secular cyclical advance. This is not just this year, next year. You know, this is going decades forward now. Okay, and so another problem I see is that if jobs get replaced, what are people going to do? And do we really need to start discussing seriously about UBI, universal basic income? Because these companies are mega companies. They're trillions and trillions of dollars worth companies. And if people lose jobs because of AI, because of robotics, that's going to come around. I mean, we know that pretty soon. I think when you go to Starbucks, there'll be a robot there, you know, as opposed to be a barista doing your coffee. Perfect coffee, never calling sick. Look what has happened in the auto industry over the last 25, 30 years. We used to have an amazing auto industry in this country. Well, if you go into a GM plant or a Tesla plant or any other cars plant or a Hyundai plant, you see what? Nothing about robots. They do the job more efficiently. They call in sick. They don't call in sick. They're not unionized. They don't have a healthcare, problems. They just work, right? Until they break, and then it gets fixed, and then it gets done again. So the world is changing, and we must adapt. And on the investing side, we must adapt to these companies. These companies are maybe some no names that you guys don't even know, other than the famous 5-6 names. There's hundreds of companies involved in AI, all the way from the top to the bottom. So I think it's time that this is seriously discussed. And maybe next week I'll discuss on Power Hour what I think about UBI and what I think, when I think it's going to come around. I don't think if it's going to come around. I think it's going to be when. And last but not least, I'll answer the comments and the questions when I'm done with this next topic. So I've been talking about this since I started the channel. What is it? Well, two things I've been talking about. One is the federal deficits and the national debt. The second thing has been talking about infinite money glitch that Mr. Michael Saylor at MicroStrategy, now it's not MicroStrategy anymore, it's Strategy. They changed the name of the company to Strategy, and they changed their logo to a Bitcoin. As we know, Strategy is the largest corporate Bitcoin holder on the planet. So this is my weekly recap, because not a week goes by that there is something new that Strategy is doing. Well, one thing for sure they're doing is they're adding to their Bitcoin holdings as a corporate asset for the last 11 or 12 weeks now. Okay. And but I also want you guys to understand something, that if you're going to invest in Bitcoin, you should not trade Bitcoin. You should trade the proxies or the surrogates of Bitcoin, such as Strategy, such as the 2x ETS, which I've been doing for the last 6 months or so. I think those need to be traded. Don't trade Bitcoin. Buy Bitcoin if you believe in Bitcoin, if you believe it's a finite asset, if you believe it's some sort of an inflation hedge, then you need to own some Bitcoin. I own Bitcoin, and I've been DCAing this year, all year. After 6 years of not having it, I bought it 6 years ago. I've been holding it. And what I do is, when I do buy it on Coinbase, I take it out. If it gets to a decent size, I take it out, put it in cold storage. So that's what you should do as well. So you have custody of your Bitcoin, as opposed to some Coinbase having custody of your Bitcoin. And, there are certain things that are going to happen with Bitcoin. I think Bitcoin is going to be used as collateral in many, many different assets and new programs and new products that are going to be offered to the consumer. So in this week's recap of Strategy and Michael Saylor, with his infinite money glitch on Wall Street, MicroStrategy now owns 478,740 Bitcoins as of February 10th. And I'm pretty sure they're going to buy more this weekend, because they just issued a $550 million perpetual preferred, convertible preferred, say that again twice, for about $550 million. So they're going to step up and buy. But Bitcoin is just going in the trading range at the moment between 95 and 105. I think it did hit 110 once, but that was short, maybe like a few hours. So not MicroStrategy. Strategy states the average purchase price at $62,473 per Bitcoin, with a total cost of $27 billion so far. So obviously they do have a 50-60% profit on it at 95. Okay. So, but more importantly, I've been talking about this until and I'm going to do it to guide you guys the correct way. There is something, MicroStrategy as a company, or Strategy, I got to get used to saying Strategy, not MicroStrategy. Strategy as a company is an existing company that they sell some sort of legacy software that's not doing well. Okay. As a company, MicroStrategy has at the moment, with all the ATM shares at the market sales that they have done to purchase Bitcoin immediately, what they have done is they have increased or diluted the shareholders. Okay, they have increased the share count. At the moment, last time I checked, which was yesterday, MicroStrategy had over 240 million shares outstanding. Hold your breath, because now the shareholders have allowed Michael Saylor and Strategy to increase the common share count from 330 million to 10.3 billion shares. Okay, so what do you think is going to happen at the market sales? Bitcoin purchases. They're using that as a treasury asset. But going back to that, MicroStrategy at 250 million shares, let's say, outstanding float and outstanding shares. Today's value at 380, I think, $328 or $330 a share, okay, this is worth about, I don't know, 82 billion, 85 billion, let's say, okay. At its peak, it was about $540 a share. Then, should MicroStrategy sell at this kind of premium? Because the business, the legacy business, software business that they're in, to me, at most is worth 5 billion. Maybe if I'm generous, 10 billion. Well, you guys see this yellow chart right here. That's something called NAV premium, and I call it MNAV, multiplier to its net asset value. What is Strategy's true worth, the Bitcoin holdings. So as of today, 478,740 Bitcoin as of February 10th, to be factual, it times 95,000, let's say, or 90 or 100,000, let's make it 100,000, even, is worth $48 billion. Well, why should the company that has no growth in its actual business sell for a premium? So that's what is called MNAV at $540 a share. So MicroStrategy was $540 a share when Bitcoin was 100,000. Bitcoin is still 100,000. Now it's $330 a share. So meaning MNAV, as you guys can see in the yellow chart, has been decreasing. So the NAV premium chart displays the premium of MicroStrategy stock over its net asset value in Bitcoin. There's a website for this, wonderful website. You guys go check it out, indicating how much more or less the market values the company's stock compared to its Bitcoin holdings alone. Okay, so that MNAV, I look at that MNAV, it got up to about 3+, which was very high at 540. Then what did Wall Street do? Wall Street came in and Wall Street shorted MicroStrategy and bought Bitcoin. That was a perfect hedge. Okay. All right. Then what happened? Now MNAV, now Bitcoin is still about 100,000 where it was. Now MicroStrategy is $330 a share. Okay. So that means MNAV is shrinking. So my point is, I am trading MicroStrategy. I am trading for it to have this kind of premium over its net asset value in Bitcoin holdings, should it? That's not my concern. But my thought process is every time MNAV gets to 1.5 to 1.6 to 1.7, I'm a buyer of MicroStrategy and I'm a buyer of its proxies or its ETFs, specifically MSTU, MSTZ. Those are the 2x ETFs of strategy, not MicroStrategy. So, by the way, they did not change the stock symbol, okay? MSTR is still the stock symbol. So my thing is, when it gets up to 2, 2.5, 2.3, 2.5, I'm a seller of MicroStrategy. So I figured that there's going to be this range between 1.7 and 2.5. And please be careful when you are trading MicroStrategy. Again, do not trade Bitcoin. Just DCA Bitcoin, dollar cost average Bitcoin. You'll be fine. Because we continue doing what we're doing with our fiscal and monetary policies, there's no end in sight of printing. So when they print, gold makes new all-time highs, stocks make new all-time highs, real estate makes new all-time highs, all the hard assets make new all-time highs, and it's pretty evident why it's happening. And Bitcoin is another one. So do not trade Bitcoin. Trade MicroStrategy if you need to, but it's a $300 plus stock. Not everybody can, and they have options, very juicy premiums on those options. But what I've been trading is selling cash secure puts. Every time Bitcoin falls to 95,000, MicroStrategy pulls back. When that pulls back, the 2x ETFs pull back. The symbol is MSTU for the 2x ETF. You guys can go look at a chart of it. What happens? MSTU has been ranging between, yes, there is slippage on these 2x ETFs, by the way. Be careful with that. And I've talked about that on a previous video. When MSTU gets down to about 8 range, which it was today, actually, on the low end, 810, 820, I'm a buyer of MSTU because Bitcoin is at 93 to 95,000. And when Bitcoin rallies to 105, my strategy rallies to 400. When that rallies to 400 from 320, okay, what is that? That's $80. $80 on $320 stock is about 25%. Well, this 2x ETF is going to go up by 50%. And then, so that means it goes from about 8 to 12, 12.5, and then it comes back again. So I've been selling cash secure puts every time it gets to 8 range. If I get assigned, which I have a few times, I just turn around and sell the calls immediately. And these are all weekly, by the way. No, I'm not doing anything long-term with this, because Bitcoin could crack 95 or 92,000 and could go to 70,000. Then obviously my strategy is going to go down to maybe into the mid 250s or low 200s, right? Then obviously the 2x ETF is going to suffer as well. So I'm really careful doing it, not more than weekly options with this, but it's been like my little ATM machine over the last 6 months or so. and I have made quite a decent amount of money on that. I'm not putting all eggs in one basket, but I am trading MSTR and MSTU as opposed to BTC, Bitcoin itself. So I'm going to end it here. So let's look at the chat and answer some questions. Okay, James L says go Trump. Okay, good morning, Luis. He's one of our members, so when you have that member sign, is there. James L says okay, that has nothing to do with finance, bro. Jude is my nemesis, is PLTR 125 coming. Okay, I hope so. WeZoom says buy the dip, another member. Okay, you buy the dip, no problem. And Vic says AD's banks were giving 10% on your CDs. Yes, mortgages more higher than that, actually, Vic. This is correct, by the way. So he's kind of displaying his age, but in the 80s, believe it or not, rates went up as high as 20% on the bonds. 20%. Okay, bro. Seriously, I was concerned. You disappeared off the Telegram group. What happened to you? What happened? I even DM'd you. I'm going like, because well, let's say he's part of our Telegram chat group. Oh, you were away. Okay, are you back now? Okay, because I was concerned. I thought your bot that you're creating to trade zero DTEs ate you or something. I was like, what happened? You know, very experienced trader, very knowledgeable. So if you do want to, get to know us, please join the members group. I'll send you a t-shirt. You become part of the Telegram chat group. And you know what's interesting, Sergio? Okay, what is it? S&P showing some broader growth. So I'm predicting a melt up of Apple, Nvidia, and Google goes crazy. Inflation is definitely here to stay. I agree with that. And money is coming in, man. Everybody's in the pool. I'm not going to argue with any of that. Markets almost at all-time highs. Now, why? Okay, hold on. Now, why? Is there more buyers than sellers? Yes, there are. That's why the market's going up. Triple X, Achilles, triple X. More buyers than sellers. How have things been, WeZoom? I don't know. I guess you guys know each other. Thanks for stressful news. It's not stressful. It's reality. Yes, another member. TGIF is correct. When everyone is one side of the boat, you may want to look around. Yep, I agree with that. That's prudent to do. Doesn't mean, well, I mean, look, it's seriously, for all of you who do spend money on things, everything has gone up by 3x, 4x. I mean, well, certain things have, but for every daily life, your rent, your auto insurance, your water and power bills, stuff you need to live, okay, and a roof over your head, they have gone up 40, 50% over the last 3-4 years. Have they come down? Fed says they are. Fed says inflation is 2%. Do you guys agree or disagree if inflation is 2% or not? What do you guys think? I don't think it's 2%. They're smoking crack if they think it's 2%. I mean, there you go. Now, this is a controversial comment. AI bust is coming. It may need a correction, but I don't know it's going to bust. I don't think Google and Meta and Apple and Microsoft are spending hundreds of billions of dollars without potentially seeing a return on all that money, but we'll find out. You may be right, you may be wrong. I don't think a bust. Correction, yeah, but I don't think a bust is coming. I think AI is here to stay. Okay, well, I'm not going to argue with that. Chris says the AI bear is always going to. Yes, absolutely. Yeah. Every pullback on the AI people know about, but if you, let's say, compare AMD to NVIDIA, right? AMD is down 50%. NVIDIA is up hundreds of percent, right? So you got to be also in the right stocks. Not every AI stock has done well, if you think it is, okay? But yes, AI bears have been wrong, and they are wrong. This is a good one. See, I agree with this one completely. The Mag 7 aren't going to be part of the AI bust. Yes, I agree with that. Yes, I agree with that. I completely agree with that. Hey, Vinny's here. Absolutely, yeah. Always take custody of your crypto, okay? Because, I mean, we know about quantum computing and stuff now, right? And but first of all, Strategy and BlackRock, by the way, execute their Bitcoin purchases and sales through Coinbase. That's why the stock's $300. All that transactional costs, right? But quantum. I mean, there was a period that Bitcoin sold off actually because people were thinking quantum computers are coming around. They're going to hack into the ledger. I'm like, I don't know. There are smart people working on that at the moment, but everyone has been hacked into. What if they hack into Coinbase and empty those Bitcoins that BlackRock and Strategy own? Because it's there. It's in their custody. Because BlackRock ETF, IBIT, doesn't, they don't take it out. They leave it there because if redemptions come in, they have to sell Bitcoin, right? So all of BlackRock's, I think they're up to 600,000 Bitcoin. It's all sitting at Coinbase. But if you're doing it personally, DCAing, especially into Bitcoin, definitely do what Vinny's saying. If you have enough of it, just take it out and put it in cold storage. And there's like the Nano is what I use, Nano Ledger, it's called Nano Ledger. Just simple process. I don't know. How's it here? How's UBI here? I mean, UBI is here maybe through the government assistance, but not actual UBI that I'm probably talking about next week, hopefully. Yes, that was the news yesterday. They pumped GME, came down a little bit. I mean, GME is sitting on $4.5 billion in cash. That was the expectation anyway. So, by the way, strategy. Bitcoin strategy is being duplicated by many, many, many smaller companies like Cooler and Mara, Marathon Digital was a Bitcoin miner. They did the same thing Strategy did, issued 0% convertible notes, and bought Bitcoin with it. So a lot of people around the globe are doing this now. So Strategy is not alone. So somebody was asking me, what is going to be the next catalyst for Bitcoin to go? It doesn't need a catalyst. Like a lot of people are thinking Trump is going to do something. US is going to create this, which they have, by the way, create this, they have a crypto czar now, first time ever, right? US is going to go into Bitcoin, I mean, look, that's not going to be the catalyst. That wasn't the catalyst for Bitcoin to get to 100,000. The catalyst for Bitcoin to get to 100,000 is our garbage fiscal and economic policies. It's truly like a finite asset. Show me one more finite asset. Is real estate finite? No. Is gold finite? No. I mean, it's not. Stocks finite? No. Nothing is a finite asset. Until proven otherwise, Bitcoin is the only finite asset that you can deal with that is not going to be more made. So the inflation pressure in Bitcoin is not there. I'm not going to call that true inflation hedge, but it kind of works, right? To protect you against the debasing of the US dollar, right? Because US dollar is being made toilet paper around, right? Now that's what's happening. Again, nominally, you have a $100 bill that you're looking at. Nominally, there's still $100. But what was that $100 buying 6 years ago, 10 years ago? And what was it buying today? Its buying power, it's much, much, much less. Although nominally it still says $100 on it, right? And Bitcoin is your protection against that. And I agree. Barclays announced today they're holding 100. Yeah, I mean, this is it. It's like the ETFs are there. The government risk is out of it. That was my concern when I bought Bitcoin. I go like, tomorrow they can disallow this thing, get rid of it. Because as we know, and Trump did, by the way, pardon the head of, I forgot his name, but he pardoned the head of Silk Road, right? The guy's been in jail for 10 years. And Silk Road is, on the dark web, laundering activities, drug activities, whatever, all the illegal activities, they're all transacted and paid for through Bitcoin. And my concern was government's going to come and say, hell with this, we're just killing this thing altogether. I'm like, oops, then it goes to zero. But now, supposedly, we have the most Bitcoin or crypto-friendly government ever. Well, we have it for 4 years. But again, people go like, Serge, what's the catalyst? I'm like, we don't need a catalyst. All the catalyst is economics. Bitcoin is going to go up, period. There's a finite amount. It may not be at the trajectory it was before, but on an average, I see Bitcoin going up 30-40% a year. I mean, some people are calling for the moon. Michael Saylor is going from, what is he called? 13 million for each Bitcoin? I don't know. Maybe not in my lifetime, but crazier things have happened. My thing is, you need to own Bitcoin. You need to own other cryptos. I don't know anything about. I mean, I know, but it's just play. This thing is serious. So until it's proven otherwise, I'm just going to DCA into Bitcoin. And because that's going to protect me from, yeah. So it's going to protect me from the debasing of the US dollar. No, thank you, Vinny. Resume system smart. I don't know. Shitcoins, I don't know. I mean, I have a small Coinbase account that I mess around with. I don't know. As you're being funny. Mike said 5 million. I think he said 13 million at somewhere in an interview. So I don't know. Anyway, I don't know. All right, so let me put this up here. If you guys want to show up and talk to me in person, show your faces, please. Here is the link for StreamYard. Right there. Here's the link for StreamYard. If you're going to show up. You'll come into the green room, and then I'll put you on. So let me remove this. Let me add this to the stage. And here's my Thinkorswim trading screen. And what are we doing? So let's go full transparency. Can you guys see this? I hope you can. Okay, add to the screen. Okay, so it should be good. Should be good. All right, so I use Thinkorswim. I was migrated from Schwab, unfortunately, but then I love Thinkorswim now because I can do a whole bunch of trades. So let's go into it. This is my positions at the moment. I own 12,000 shares of Werewolf Therapeutics. I've held it for a while. I reduced position by 3,000 shares because it rallied a little bit. I own 5,000 shares of RB Robotics. I own it at 286, but I have it wrapped up every possible way with calls and puts. So again, all these positions I'm going to put up on the community page. Okay. I have some puts on one of the nosebleed stocks. It's called Oklo Nuclear. I have 170 of the March 24 expiration, $25 put. Stock is 52. You're going to say, Serge, what are you doing? It's my lotto ticket. I think I'm buying them at like 20 cents. Stock drops $10 overnight. These things, and then I'm willing to lose the whole thing. So most important thing for me is account equity. I don't look at single positions individually. I have April debit spreads on Cooler Technology, which is also doing what Strategy is doing. And yesterday and today, I started taking a stab at shorting. Okay, hold your horses now. Don't kill the messenger. Shorting Palantir, right about 118, 120 range, through options, limited risk. Don't worry. I did 25 lots so far, so I'm long the 115 puts and I'm short the 100 puts for March, and 35 days to go. I think that stock does not deserve to be here, although it is here, and I'm giving it a stab. And I think the market makers are just about finished hedging. And we will see a little rug pull on that. So it's just a trade, Don't get all riled up that I'm short Palantir. That's been going up. It's done amazingly well. I mean, stock is not worth, obviously, according to what I'm thinking, it's $250 billion. Maybe long term it is, but I have my nemesis. He keeps saying Palantir to 125 since it was 70, and he has been nothing but right. So I'm not going to question any of that. But it's through options, so limited risk. We'll see. We'll see how the trade turns out. So again, I'm long the March 21 expiration, 115 puts and short the 100 puts. It's called a put debit spread. I was long few thousand shares of KDLY, called Kindly MD, from mid twos actually. And this morning I chucked all of it about 380. So my account is up about 2% in February after being up 37%. February has been tough. I had another dance with Palantir, which I had actually shorted the shares and got my ass handed to me. So without that, I would be having probably a double-digit month. But then, what can I do? You know, you do trades and you're right, you're wrong, you're wrong. I'm not going to mess with it. So let's go through some charts and then I'll answer some more questions and I'll say goodbye. So here's the S&P 500, almost at an all-time high. I mean, this looks like after a little bull flag, this looks like consolidation phase going up. It's been in this channel. I mean, seriously, I don't draw too many lines on my charts, as most of you know. MACD is turning back up again. It's been in this channel forever now, and that channel is going to stay. We get close to the upper end of the channel, we sell off. We get close to the lower end of the channel, we rally. I mean, you know, a couple of times we came and kissed the lower end of the channel. Look, man, uptrend is an uptrend. You cannot argue with it. You trade what's in front of you. You're not going to go make guesses and create personal biases. And what people do is they create these personal biases by drawing 8,000 lines on their charts. I'm going like, I need two. I have this one here, which is in fact, I should extend that to the right. Extend to the right. So there's that. Let me extend. This is extended to the right. So this is an intermediate term uptrend chart. We're down to like 480 on that. We're at 610, people. So whatever sell-off comes, it's not going to be that important. Same thing is the way it looks is triple Qs. Same thing, same consolidation phase, almost making a new high. All-time high is 539.15. We're at 538.24, so we're literally pennies away from it. And triple Qs, as you know, is the NASDAQ 100. This is IWM. This is the Russell 2000. Russell 2000 is lagging. It's been lagging. You know, it's been nothing but the top 20 stocks in the S&P 500 and triple Qs. You know, generals are leading the rally. I was hoping for IWM to do better if the rate cuts were to continue, because rate cuts are good for small companies. But if the Fed is ending the pivot and actually going to raise rates, IWM is underperforming completely. So that's the Russell 2000. And let's go into some different stuff. Apple came and kissed its 200 EMA at 220 after being at 260, $40 sell-off, pretty steep in a couple of weeks. Rallied, went into earnings at 250, pulled back again, and now, you know, we're creating this little beautiful pattern. And there are some great looking Max 7 stocks, and there are some horrible looking, not horrible anymore. Apple looked horrible actually. This is Nvidia. You know, I mean, Nvidia really faked the longs, obviously, right? It came down and closed under its 200 EMA, which is really rarity. And that big gap down, if we're going up and closing the gap now, that gap down happened because of, you know, that Chinese AI. Hey, look, you know, when I just said Chinese, let's pivot into that. All of you know I've been talking about Chinese market and Chinese stocks. Very, very bullish on it for at least a month and a half now. And sure enough, my work is getting proven. That's Alibaba, people. 80 to 125, straight up shot, up again today. I mean, my chat group knows how bullish I've been. I talked to them, obviously, during members' lives. Made good money. I'm not going to complain. The next one was Billy. Beautiful breakout of a descending triangle. Hit that trade on the nose, literally. Like all the members, I think, making money on that. And Baidu is another one. I mean, the long term, these stocks are extremely cheap. And then I had a video actually I think it's coming out today. How I predict that the Chinese Max 7 is going to completely outperform the US Max 7 in 2025, and we're on our way. So, and another one is JDS Uniphase. If you look at long-term charts of these, like let's say, for example, if you look at Alibaba, and go back and look at a long-term chart of Alibaba, 10-year chart on Alibaba, look where Alibaba is. Alibaba used to be about, so I'm equating Alibaba to Amazon of China, right? Used to be a $320 number. We came down into the 70s based for 3 years, 2.5, 3 years. Now we're breaking out. You know, just because it went from 80 to 120 doesn't mean it's done its work, up 50% in a couple, 3 weeks, right? Same thing with Bilibili, which is the YouTube of China. you know, all this talk about, and there's Billy. It's just, I mean, that thing was 157, came down to the single digits, and now we're breaking out again. So, you know, all this talk about tariffs and Trump doing this, Trump doing that is overblown. Okay. There's one reason I'm turned bullish a while ago on China is because the massive trouble that they're in, their real estate market, but the stimulus is massive in China. So when the stimulus was massive in the US, what happened to the US stock market? Right? Okay. So, and this is the, if you're not interested in individual names, this is the iShares China large ETF cap. Look, this symbol is FXI, Frank X-ray Ida. This is a 10-year chart of FXI as high as 54. We're at 35. Yes, we were down to 20, mid-20s. If you're interested in like a triple Q of China, let's say not exactly, but close to it, this is the one. FXI is the symbol. And if you look at this is the long-term chart. So this was a $73 number in 2007, and this dead man's EKG, and then came down. Obviously, Chinese economy a little in trouble. We're just getting going now. So long-term, this is a long-term cyclical play. This is not about, and I do trade them in and out. Don't, you know, I'm not talking about that. But what I'm talking about, there's a play here that could last for a while. So very, and any and all pullbacks must be bought on these names. And I'm talking the Mag 7, not the shit Chinese stuff, not the pump and dump stuff. I'm talking high quality. Again, some of you may not agree that they're high quality, that you say their accounting is hocus pocus. I get it. I get all that. But I think they're definitely going to outperform the US Mag 7 in 2025. So, you know, a couple of craziness that's going on, obviously, with Palantir. Look, man, you know, it's a trade. Trade is a trade. Palantir, 119.10, up another dollar. It just keeps grinding higher now. Is it overbought? Yeah. Can it go higher? Sure. So there's my trade actually with the two labels. I'm long the 115 puts, short the 100 puts. I put on 25 of them. I'll add maybe a little bit more, but I don't put more than probably 7 to 10% of my account value in any of these things. So, you know, we'll see. I'm predicting that there's going to be, with this trade, I'm predicting that there's going to be a pullback to about 100 over the next 4 to 6 weeks, and it may go higher before then. But you know, that's why you do options, limited risk, unlimited downside. Well, not on this trade, unlimited. So I started doing them about 5. I did more about 420 today on the put debit spread, and you know, there's many ways of skinning a cat. So another one that I think is like ridiculous is OKLO. It's a Sam Altman company that do nuclear stuff. They don't even have revenue. Stock is worth $8 billion. So I'm going like, okay, it's time. You know, these nosebleeds don't end well. Okay, so when I was saying how they don't end well, I was actually on another channel the other couple of days ago, and kind of argued that, you know, I was actually just looking at it. You know, this is Serve Robotics, the bug-eyed robots. Yesterday closing at 23 change and opening at 13 today. Okay, and same thing with SoundHound. You know, look, these companies buy at your own risk. High 24, we're at 10. So shorting things work, but you got to short nimbly, and shorting has unlimited risk to the upside. You have to be really knowing what you're doing when you're shorting, and you have to, yeah, because you cannot go under 0. Okay. But if you look at SoundHound, this beautiful chart, we did trade SoundHound, a ton of it, you know, between 5 and I did 5 and 15, and then it went to 25, right? All these things, when they go parabolic, they always come down to earth, and you got to be really, really mindful. That's why I'm going like, okay, this thing is ridiculous. This company has not created, they have 10 employees, have not created. The only reason this did what it did, which I didn't participate on the upside, which I should have, their CEO became the energy secretary, and they pumped the crap out of it, but then shorts are getting killed, of course, and you know, that's what happens. I don't know if you guys have any. Let's look at some you know, Meta. I think it's up 20 days in a row, 21 days in a row now. Yep, 20 days in a row. Look at this. This has never happened. I've never seen this. You guys see these green bars? Let's see, count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yep. Day 22, up again, up another $10. Look at this uptrend. I mean, if you guys can't make money in this, I don't know. I don't know what to say. Maybe market's not your place. Again, our chat group is wonderful. Luckily, we found one of our lost members because I think he was like doing something else. But he's amazing. He knows what he's doing. So this is strategy, not micro strategy. You guys see this pattern here? And actually, I may have to draw some lines here. There's the top. There's that. We're building this pennant formation long term. When Bitcoin goes to 200,000 strategy is going to go to 650. And this is the little one that I trade called MSTU, which is 2x ETF of MicroStrategy. Strategy, mother humper. You guys see this, what's happening? And I do trade this. Look, I traded it here, bought it here, sold it here through options. Look, I'm not saying I have turned this into an ATM machine. Every time it gets down to 8 levels, I sell cash secured puts. If I get a sign, great. Then I'll sell the 20% higher cost for a week. If it gets called away, it gets called away. If not, I keep selling calls, lowering my cost basis. But Bitcoin is doing this, and this is IBIT, which is True Bitcoin, BlackRock Bitcoin ETF. If you want to participate in that, IBIT is, see what's happening? Just going sideways. This follows Bitcoin dollar for dollar. It's just this consolidation phase, just like we had here for months. Okay, and then when it broke out, it broke out. So I expect the same thing to happen. And this is BITX, which is 2x ETF of IBIT. So if you always want to gamble into these things, that's your play. I'll get back to the screen and check out more questions. And if somebody wants to show up their pretty face, if you have any questions, please let me know. Yeah, Baba to the moon, yeah. Okay, good question. Why did you buy? I didn't buy this time. I bought the spread. Hold on, let me show my face. This time I bought the put debit spreads on 15/100s. Volume is slowing down. I feel like today with OPEX, all the market makers are properly hedged and simple trade. Nothing more, nothing less. I don't make things too complicated. And actually, I don't know. What else is there to say? That I think I answered it. Yin, is that a Chinese pump and dump? Is it? Don't get involved in these, Lewis. Just trade the good ones, bro. Let's take a look at Yin. Oh, sorry. What is that? Yin, 1 year, 1 day, New York Stock Exchange. Oh, China Bull 3X ETF. Oh, okay, cool. Sorry. Yeah, if you want to do that. But I'd rather do FXI, dollar cost average into FXI. But yeah, okay, cool. Thanks for letting me know. Yin. I like it. I like the symbol. Chinese ETF. Bitcoin is good for inflation hit so far, but okay. Bitcoin is good inflation hit so far, but hasn't fully been tested in stagflation. No, there's no cure for stagflation. Nothing can be done for stagflation. Nothing. Zero. I lived through that. No. We'll see. Baba to the moon, yeah. Sobering message? No, it's not sobering. It's reality. I mean, it's going to happen. Hard assets, man. What else is there? So nobody's going to show their face? Okay. All right. Well, then I'm going to end it here. Thanks for the support. Much appreciated. Much love. Be safe out there. Please thumbs up. Become a member. Show your face. I'll send you a t-shirt. And the more importantly, Telegram chat group. That thing is on fire. We have newbies. We have super experienced ones like Ayn Rand there. And we have Macro Baked here in the chat, who was like in his 20s and acts like a 90-year-old, which is unbelievable, which is amazing, because he paid his dues with GameStop. I think that's what happened. He burned his fingers touching the stove a little too many times. When I'm telling you the stove is too hot, don't touch it, you're going to burn. And that's what happened. But now he's doing tobacco stocks and gold stocks, and he's doing great. It's just that he should take more risk. But maybe slowly get into the shallow end of the pool first. But yeah, our group is amazing. I love that. I love chatting with them, and I put all my trades live on the chat live. Like, I do it, I put it on. You do it, you don't do it. Again, not financial advice, not trading advice, none of that. Okay. You follow at your own risk. I create a supermarket of positions, and then at the end they turn out okay. It's because equity goes up. That's it. I'm not going to do anything else. But yeah, it's been awesome. So thumbs up, please. Please share. And what else? That's it. I'll see you guys on Monday for trading with Sergio. And Monday, no Monday. There's no market on Monday, isn't it? Is that market's closed on Monday? President's Day, right? I think so. I think it's President's Day. If the market's open, I'll be there. If the market's closed, I'm not going to do that, but I will do members live next week, 3 p.m. Pacific, 6 p.m. Eastern. Those are also on fire. We have on our member group, we have a crypto expert, AI expert, data analysis expert. I'm not joking. Seriously. I'm the clown. and I've designated the cryptos are AIs are, that gentleman that just showed up, he's creating a bot to trade 0 DTEs. I mean, we're going to swim in cash, hopefully, with that thing. We have a data analysis expert. He's a PhD student at UC Davis. I mean, we have some ridiculously smart people there, and we have a bunch of newbies who are learning, hopefully, fast. I structured the trades. I put them on the way I see it. Some work out, some don't work out, but all it has to do is a couple of them have to be home runs. The rest are no big deal. You trade. But no, the group is coming around. I think, markets close on Monday. Okay. I think it's going to be, and I'm going to grow this. I'm not a quitter. So I think this is going to be the most amazing finance free Telegram chat group ever. Seriously, because I know there's other discords, you pay for it, subscription, this and that. I'm like, screw that. Paid forward, share what you know, educate. I think we have 21 or 22 in there already. 44 sets of eyes and 22 brains are better than mine, for sure. So I'm going to grow that thing into the best group possible. Some are learning, some are already learning and suggesting. Hey, man, I think it's great. So if you guys are interested, join. All right, cool. Midwest Cannabis closed Mondays. Yes, okay, cool. Then there's no power hour on Monday, but we'll be back next week. No, there's no trading with Sergio on Monday, but next week there will be power hour. Hey, there's a member. There's a member who just did a directional bet. How'd that turn out, sir? That turned out pretty good? I think it did, yeah. Okay. Can I buy a call on that? Sure. We could create some derivatives. If you call Goldman Sachs, they'll create a derivative for you. Special just for you. But WeZoom is in there. Yeah, that trade turned out really well. And so anyway, you guys joined late, but I'm about to take off an hour and a half. Please watch the replay. Please put a thumbs up. Please recommend. And if you do choose to become a member, we appreciate the support. You email me. Actually, WeZoom does the merch of the channel. Gig with it. Visit the website. Some cool merch. And yeah, you become a member, you get a free t-shirt, $30 value. I think I'm going to raise the membership cost. It's like $10. It's like a Big Mac. I think I'm worth more than a Big Mac. Don't you guys think? I mean, seriously. 4 extra live stream, free t-shirt, and all this brain power? I mean, shit. I should charge like $1,000 a month for that. Because one trade will pay for like all of it. Yeah. Oh, you and your show. Okay. You know what? I'm not going to promise, but maybe this weekend. Maybe this weekend. Okay. Oh, there you go. No, you guys are buying. You guys are buying. You guys made more money than me on that trade. I pulled the profits too early. You guys made like stupid money on that trade. Shrimp tacos on you. Anyway, just kidding. But no. So life is good. Stay healthy, please. Stay safe. Markets open every day. Don't be a jockey. Don't be a hummingbird. Selectively. Wait. Be like a lion. I said this before. I'm going to finish with this. As a trader, don't be a hummingbird jumping from flower to flower 10 times a day, trying to suck a little bit of nectar while your wings, are flapping, and you're basically whatever you're sucking and you're giving it out by just doing that, right? So the analogy is be like a lion in the bush in Africa. What are you going to do as a lion? Are you going to wait for a squirrel or a rabbit and chase? And that damn thing is probably faster than you anyway. You're going to exhaust yourself trying to catch a little meal. No, you wait. You wait for a zebra or a gazelle and chase the damn thing to death, like Baba and Billy or JD and Baidu and all these things, right? You chase it to death, you eat for a month. That's it. That's the analogy. Don't be just like, oh, look at this line, look at that line, look at this line, look at that line. Oh, it broke that line. Oh, it just got stopped out again. I'm like, bro, calm down. Things will be okay. Anyway, so much love to you all. Thanks for the support. Please put a thumbs up on the way out. I will see you guys next Friday at Power Hour. You missed out.